This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. My baseline bet is that we had weeks of potential drawdown that were going to be coming in this period, but we hadn't really triggered anything until this week. And Monday I said profit taking, and then I had an inkling that EYW, the Korea Kospi equivalent over here for our Korean ETF, and I literally said I have an inkling that's going to be a little pullback, and that was Monday. Yesterday I said I got another inkling, even though it's not a thing, nothing's happened. And so here we are on Wednesday. We did have a little bit of a red close, not a lot, but this morning it's down almost 6%. So EWY, again, it is not a pullback of size until we can get back inside 208.25. I set that up because I had an inkling it was going to come on down, and it is below. It is now 200. So it's got to stay below. Remember, I'm on a monthly, big picture, for this to just basically trigger the profit taking, which was the only warning. I wanted to show just a quick little doodad here. Yardeni is out, which is adorable. And Yardeni is basically coming out saying, okay, that's the big picture. We're extended, right? Which is really funny because Yardeni has been like, he's a super bull, big picture. He expects we're going to go to 82.50 this year, which is very close to my 8,200 that I gave end of December. But just yesterday, he's like, but we are really extended. So this happens to be S&P 500 forward price sales, very extended in this kind of 3.3 area. And then over here, forward earnings, just so you know, are 26 point something, whatever it is. I can't exactly tell, but let's just say 27. It's kind of funny because we're so excited about this earnings season. And again, this is to be determined. We got to see how far we even pull back before we get bid back up again. But basically, forward earnings is up above 26, near 27% year over year. That is as good as it gets outside of a massive QE type of extravaganza. This was the great financial crisis, and that was COVID, for crying out loud. So anyway, we are elevated. Long story short. We got all kinds of data coming in of late where the AI theme is definitely being tested. And that narrative can also weaken the knees of bulls. Microsoft data suggests using AI is more expensive than hiring people. You already know that Uber and McDonald's said stop using the tokens, they're more expensive. Anyway, so that'll have time to play out, but the narrative can basically dent the enthusiasm. A market like this is not allowed to stall, is what I'm trying to say. The option flow has been so bullish. It's just not allowed to stall, because then what happens is you get the effect of what we had in January with gold. Okay, so we're not quite there. It's not that bad. But markets are still priced for perfection. Look at this Jonathan Krinsky chart. For anyone who knows him, he's a CMT. I like him a lot. If the week ended right now, okay, this is as of yesterday, the 10-week gain in history of the S&P 500 tech sector, which dates back to the 1990s, would be the strongest in history. But that's not where we're at. We're on a Thursday, and the market's trying to get bid back up. Anyway, we definitely have some extreme readings across the board, whether it be Yardeni's forward price sales, whether it be current forward earnings in nominal value. It's just very elevated. Price for perfection, however you want to put it. Profit taking on basically kind of all-time high profit margins, as good as it gets, price to perfection. What do I mean by that? This is, and I wrote this from the author of this particular chart, which I wish I could remember where I grabbed it. It is showing you that the bubble right now in chip makers is an unsustainable profit margin bubble. So we've got earnings bubble, we've got valuation bubble, we've got spending bubble. We don't have a productivity bubble, right? None of this has really proven that yet. But we do have a profit margin bubble also. Here is, for example, NVIDIA. We know that they're in the 63% handle. Hynix, which is and Samsung, they're really similar neck and neck memory players out of South Korea, massive profit margins. But the problem with that is that NVIDIA trades at 22 times forward profits based on net profit margin of 63% and gross of 75%. That's a really important number. Hynix 2, this is not sustainable. When they normalize, so too will the stock prices. So we have not seen the profit margins come down. That will be the trigger, especially in the next earnings cycle, to be looking for. Obviously, we haven't got that yet, but it's extremely elevated. I mean, you got 2000 here, 2005. Look at this down here. Never ever been this high, not even in 2000. So it is something to keep in mind. And Avgo is down 15%, hasn't moved since basically the open because it's sitting on the 10 EMA. But look at that bearish engulfing, massive bearish engulfing of basically 100 points. Really a massively beautiful bearish engulfing on Avgo. I did forget, we have Ciena last night. I want to look at Ciena earnings real quick. Interesting. All right, so we had earnings before the bell in Ciena, and this has been a huge, massive outperformer. Just shockingly, 100 to 600 in a year. So that's a lot. Not even a year. It's insane. So the fact that it was as good as it gets, price to perfection, however you want to put it, is representative of everyone is long. So what happens if they start taking profits, not just on earnings, but they follow through in taking profits? See that 55-day? That is your saving grace if you're a bull. You do not want to close below the 10-week. And obviously it's Thursday, not even 10:30 a.m. But this is a huge bearish engulfing for Ciena. And Avgo is a huge bearish engulfing, Broadcom. Both of these have sold off post-earnings on as good as it gets. I'd be questioning that, the AI narrative might be in sideways at best. In other words, I have not seen a candle like this in a trend play like Ciena. This is a pullback because of macro event risk. This is very important difference. Anyway, this is macro event risk right here. No question. Iran war. Now, you got saved to the 10-week for Ciena, CIEN, and you moved higher. Every single freaking week it closed green. We are extended from the 10-week. We did a quick dance down to the 10-week. Last week we had an inside week, but we still made a new high. Look at the new high right here. From the prior week, look at that, we made a little high. Now this is the trouble. We literally gapped up on Tuesday the 2nd, Wednesday the 3rd, into earnings this morning, and now we have a 19% pullback. It's 20% peak to trough. Let's just say 20% pullback, peak to trough with a huge bearish engulfing. Do you see anything like that since this breakout that occurred very, very, very obviously back in September 2025? No, you do not. That is a trend change. That is a massive trend change in Ciena.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.